Hello and welcome to another weekly financial update from RTS Financial Planning. As always, this is where we go through some of the stories in the world of finance over the last week and also discuss some of the subjects our investment committee are looking at as part of our RTS investment strategy, which we offer to all of our clients. So it's been a bit of a mixed week for the major world stock markets, with the US market certainly making most of the headlines. So for some time now, the US stock market has been leading the way in terms of rising valuations since the COVID crash. But it appears these valuations have got to a point now where the markets are starting to get a bit worried about how expensive it is. And we've certainly seen a correction, particularly in the tech stocks, which have driven the high valuations of the US stock market in the last few months. As an example, some of the tech companies that have fallen recently, Apple was down about 15%, and Tesla, the electronic car company, was also down around 33%. And this all just serves us to remind us that valuations are important when it comes to investing. And the higher the valuation, there's always that risk that you're in a bubble territory and that bubble could be about to burst. We certainly saw that in the year 2000 with the tech bubble, where a lot of new internet companies were formed and reached very high valuations very quickly before people discovered they weren't actually making that much money, and there was a big sell-off and a crash. So yeah, do be wary of valuations. I mean, our investment committee with the RTS investment strategy, we've actually reduced exposure previously to US stocks in favour of UK and European stocks, which appear much better value. But having said that, you never know when this bubble is about to burst. So it could be that the US market continues on its merry way for some time yet. Time will tell. But volatility is definitely returning to the market. Since the COVID crash, stock markets have been relatively stable, have been rising quite nicely. But as you can see from the VIX index, which measures volatility, there's certainly been an increase in the last few weeks. And a lot of this is down to a couple of things. Obviously, coronavirus is still around and we're still making our way out of sort of a period of lockdown and economies are starting to recover. Obviously, case numbers are going up again, mainly in Europe, and this will be a bit of a concern to investors. Also, the valuations being so high does make investors jittery, and there will be investors out there that will sell to try and bank gains they've already made. And we're also now going into the US election season, where the US will soon appoint a new president, or potentially keep the president they've currently got. And the markets will always get a bit volatile around this time because they're trying to predict which way the election's going to go and what this means for business going forward. But having said all this, the UK stock market does have its own problems, and we're reminded this week about Brexit. So Brexit has not gone away, and it appears the chances of a no deal are actually getting higher. And the market's certainly been pricing this in for some time now, as the UK stock market's certainly underperformed when you compare it to the European and US stock markets. And if we do end up with a no deal at the end of the year, it's likely the pound will fall. But it doesn't necessarily mean the UK stock market will fall. We saw this at the time of the European referendum. The pound did fall, but the stock market went up quite significantly. And this is because if the pound does fall, the UK stock market is made up of a number of international companies where profits are made abroad. So when they bring these profits back to the UK and buy cheaper pounds, they're going to get more bang for their buck. The UK market will also then appear cheaper to foreign investment if the pound's dropped. So that's another potential plus point for UK stocks. So that wraps it up for this week. I hope you found it useful. As always, do leave comments. Let us know what investment strategies you're using and what's worked out well for you. Always happy to discuss investment solutions with people and see how they're getting on. But until next time, take care.